during that breakdown?
Yes, yeah, exactly. And I did what else did I catch yesterday? Let me have a look here.
Can you guys hear me
Caught
now?
yesterday. I caught gold a little bit. Yeah, I hear you now.
Okay, perfect.
There we
Much
go.
better.
Yeah, I'm gonna have plenty of time in the city today, so I got a few trades I'm gonna break down for post on Instagram. You guys pumped for the boot camp? We got Jen here. What's up?
So yeah, I was saying to VJ, I like how you guys are doing, like, the breakdown, the reels and stuff. It's a lot
Yeah.
more like interactive, and I'm guessing gets a lot more engagement for you as well.
Oh, 100%. I'm kind of disappointed with TikTok. I think I'm gonna end up deleting it.
You know what? I was saying to VJ, you gotta do like TikTok lives and stuff like that. It's a bit difficult. It's a bit
Good
difficult on
idea.
TikTok. Yeah.
I their new terms and conditions just came out, and I don't know if you saw anything about that.
Oh, is it something about financial advice, so and so?
No. Privacy issues.
Oh, okay.
The amount of access that they have to your phone. For some reason, they can track keystrokes. They can track, what other apps that you have on your phone, what data you have on your phone, who you're texting, what you're texting. They have access to your camera on your phone. I got to do more research on it, but from what I've heard, it's just obviously it's a little scary.
That's pretty much every social media, though. When you're looking at Facebook, Instagram, any of those,
Yeah.
I'm not sure if, like, you've noticed, but usually for me, when I'm talking about something, literally a couple of minutes after that, if I open up
All
any
right.
of my social media, I will see, like, advertisements about that.
hmm I mean, these are U.S. companies too.
Yeah.
That's my only issue is, and we really can't trust U.S. companies either. But the fact that this is coming from China too, it's a little uneasy, right? I'm not saying I'm definitely going to delete it, but it's just like if you read these things, it's like why do you have all that?
Yeah. And there's
It's a
also,
principle thing.
yeah, and I'm not sure, like, if you saw, like, the news or anything about that, but there were certain accounts on TikTok
Uh-huh.
that I believe it was the Chinese government or like something related to China, where they were creating like these, like I guess you could say like fake government accounts or whatever, where the whole purpose was to push propaganda towards people.
Hmm. Yeah, I wouldn't be surprised. Would not
Are
be
we talking
surprised at
about
all.
the evil technology people?
Hmm.
Yes, we are,
Ah,
Dave.
yes.
How are you,
Yes.
buddy?
I'm doing good.
Yeah,
I'm
Jamie and I
doing
had a
good.
good talk yesterday when we were back testing about how a lot of things don't make sense these days.
Yeah. Yeah. I mean, I can tell you from work, just looking at it, what we're doing, we're strengthening our firewalls, our security policies, a lot of things because, as we can see more and more, companies like, the companies like Hawaii or however their name is pronounced, they really are nefarious in what they're doing. And the public is only seeing it now because it's been hidden for so long. But the government is now putting it, I guess you could say, out in the open for people to understand. Listen, we're not just trying to block TikTok and these technologies just because it's coming from China. We're blocking it because it's actually doing something nefarious,
Yep.
and you need to be aware of it.
Yep.
You know, but a lot of people, they're in disbelief. They have a distrust of the government right now. So they're going to just sit there and say, oh, well, there's nothing wrong with TikTok until you get hacked 5 times, your credit cards are gone, your phone is locked down on you. And then it's like, oh my God, what happened? Well,
Yeah.
you didn't listen.
Yep.
Yeah, your email, and then they steal your Instagram and your credit cards and your bank accounts and your Spotify and.
Oh, yeah.
There
Mm-hmm.
was this girl when I went to the East Coast for my practicum where she was telling us a story that she got hacked by one of her ex boyfriends or something like that, through Snapchat. I'm not sure like if he sent a snap or something like that, but through Snapchat he was able to gain access to like her entire phone and her photos and everything like that and start blackmailing her.
Yeah,
That's
that's just creepy.
Yeah.
I'm about to throw my
Man.
phone away.
What's that?
It was.
I'm about to throw my phone away.
Yeah.
You know? Listen, Mr. Prime Minister, as long as you have Google on your phone, they already know everything about you.
Yeah.
For real, for real.
Yeah, it's almost too late now. All right, let's get into some money making habits. So we have. So Charmer, you want to do technicals first?
Yeah, just go ahead and break down the charts and then we'll move on to the fundamentals.
Okay. All right. So on the monthly, a few things have changed other than with the current monthly candle. We ended up passing the low over here. Right. Looked like we were heading down to possibly retest these areas, and we still could. But right now, the current monthly candle just flipped bullish. Right. Looks like it grabbed liquidity to now hold support around that 162 area. But I have some of these historical levels marked off with 156. Obviously, that previous resistance to the left. We have 158, which we keep retesting, and now 160 is holding a solid support as well. So looking at the weekly now, still in this range, right? Kind of coming back into more of a range. It looked like we were breaking out of it as we were continuing down with a few clean moves to the left once you broke 160. But right now we just ended up bouncing off that area over here and now flipping bullish. All right, so where are we going from here? Looking at the, looks like the yen is down about 1% today, so that could be that pullback, and also solid demand area, of course, on GJ over here. So we can mark this off, 160 flat. Price keeps retesting it. Last time we did, we ended up just bouncing off of it pretty solidly. Over here, didn't quite tap it, but we got a nice demand area from that area as well. And then now tapping into that area again, could we be continuing up? All right, so we're now approaching this support right over here, right? And then we got another support right here to the left that we could be approaching around 163 psychological level. But these are very healthy bullish candles right now. Current daily candle is as well. Looking at the 4 hour now, 4 hour, we now have a resistance that we're approaching. Right here around 162.500. We could drag that to the left. We got a few areas that we've bounced off that level before. So now, again, we're approaching. We have a higher low formed right over here around 161.600. Actually, 161.500. Holding a higher low over here. We're now sitting in this range, right? So can we break above, head back up to 163? We have a resistance right up here to the left. That we have a clean move to the left that we could be approaching. But again, 163 is definitely held as a support before. So we'll see if that's an area that we need to really pay attention to. And if we have enough range from 162 600 up to that 163 level. All right, sitting back in this range, kind of just been bouncing around this area. You need to close above. We can move this down just a tad over here. We can move that down a tad as well. Yeah, we could definitely mark this off because that's a psychological level. More so like a horizontal line almost. Make that. But right now, what we ended up getting, even though we're in a range, we just want to understand the anatomy of the candles here. Ended up forming a higher low over here, pushing up into 162.600, and then we pulled all the way back, but held support right over here by bouncing off that 161.200 level, right? Then we got a strong bullish candle, little liquidity grab, another strong bullish candle coming back up to 162.600. Then another higher low with another strong bullish candle, right, with a wick to fill. So right now, what are we doing in the 1 hour? We got about 18 minutes left for price to close over here to see if we're going to end up closing above 162.600, right? And if so, can we end up continuing back up to 163? How many pips do we have in this area? About 40 pips, right? So depending on the price action, can we get a nice move? I'm actually just going to make that a little bit thinner can we get a nice some nice candles to push us up? Just that right here. Now looking at the 30-minute, you're seeing these higher lows formed a little bit better. All right. Do we have a valid trend line? If you guys want to put that there, there you go. All right. So we've just been making these higher lows, but again, we keep rejecting this level. So don't get too antsy. Don't get too impatient. Wait for the close above here for price to continue up, right? Because if you just get a close, maybe you could just take this up with a bottom wick rejection and take this right back up to 163 with some New York volume, right? It's a good time to be starting these streams. Obviously, like, you know, we start around 6:30, and it's a good time to like get the breakdowns done within a half an hour with the fundamentals and then the technicals, and then eventually we start doing group breakdowns where everyone volunteers and does their own breakdown, and I kind of correct whatever needs to be corrected. But like it's kind of cool hopping on right now, 7:45. You don't have that, I don't know, what's the word? Anxiousness to just jump into a trade during pre-New York, and now we have the New York volume to go ahead and take something. So with that being said, that's really what I'm looking for. I don't think there's any valid sells over here until we start breaking structure, maybe here around 161.850. Once you break that structure over there, that means we keep rejecting. We've rejected this area 3 times already, right? So we start breaking this support right here, continuing down. I wouldn't be taking a sell in here, but maybe wait for this to continue down. You got a nice move to the left over here, about 70 pips, 69 pips. Want to hear any jokes? And then a clean move, about 115 pips over here to the left, coming right back down to 160. Right, so this would be your safer sells right over here, high risk, high reward sells right over here with the clean move to the left, but still kind of playing in this range over here. Right, Sharma, you got anything to add, or anybody else for that matter? Well, team.
No, I would just wait for price to break out of the consolidation. But a lot of this, again, we have to wait for news, or we have to wait for market open to give us a push.
Yep. What would you like to see here?
We're already getting a break and retest here on the 30-minute, like a nice support being formed, and then prices trying to push up. So what I want to see is this candle coming up and closing some sort of an engulfing candle around this area, and the next candle makes a bottom wick and continues pushing.
Beautiful. Exactly. Now that I'm looking at this support over here, I think you may have safer sells right below here. Right? Because as you can see, resistance, support, support, and then you got that wick right there as well. Obviously, you do have a support right here, but you have all this price action that price can end up rejecting right in that area. Not to mention, on the 30-minute, you got this 50 EMA as well that price could end up coming back down into, holding support at, and then continuing back up or continuing to consolidate. But below here, you still got about 50 pips, or 55 pips right here that you could be taking something, but at least you know these are going to be safer sells and that you're not going to get trapped in here. All right? So, anybody else have anything to add before we move to gold? That's good, bro. Awesome. No? All good? Cool.
Yeah, all good.
Ooh, I did not redo my breakdown before. I never did it for you. Okay, so now you're gonna see me marking off our historical levels over here. It's gonna be quick. 2075. You're gonna see 1900 or 2000. Like to mark off. Like to mark off 1900. 1830, that previous resistance, as you guys remember. 1750. And then, of course, 1680. Oh. Alright, and then as you guys know, we've had this trend going since 2018. We've just been bouncing off that area multiple times, holding it as a support. Got that wick over here, very key area. Once we get that really good NFP data coming out in August, and price just bounced off of it. But right now we ended up closing below that level. And if you guys look, we got the same exact price action over here when the Fed started tapering back in 2012, 2013. Right? So when they were increasing rates, tapering, and all that stuff, tightening monetary policy, that's what you got. You got this little pullback, of course, right here around 1550, right? Holding support. You got this little pullback, but then price just continued down. So you're always going to get these little pullbacks over here that we got. If you look at the weekly, that you're getting here on the weekly on gold. But as you can see, price is starting to possibly turn around over here as well and hold possible resistance around that 1780 level that we held as a previous support. You'll be able to see this a little bit clearer on the lower time frames, but we had a little consolidation below here, but this was a strong demand area pushing up. Same thing right here, and then we ended up rejecting with this candle right there. So now, since creating lower highs and lower lows in this bearish trend, we're now tapping off a key area. A lot of times gold likes to kind of consolidate and reject that level multiple times before it continues down, but nonetheless we have all the fundamentals to push us down here. So we're now flipping bearish here on the weekly. We got to see where we're going to end up going. What's in the chat? Okay, Sharma will be right back. Looking at the daily now. The daily, don't get too antsy. As you guys know, the last time we were creating this pullback over here, we tapped multiple times. We held a resistance multiple times up here before continuing down. We even got this further pullback over here to then continue back down. Right? We created a low, then we continued up, and then continued back down. So right now, don't be surprised. It looks like we're trying to hold the support right here. Right? We also have 1750 that we broke through, but we tapped into this key area, meeting up with the trend line, meeting up with 1780, 86, I would say, and that's that area I was talking about. Support, resistance for about 2 weeks, and then strong demand area right here. Right here you got that wick, then you got that wick right there. That candle actually flipped bullish before continuing down to fill that wick. Right, so now we got some pretty clean price action that we can mirror once we start to consolidate and break some of these supports, break 1750, and I would possibly look for some kind of a higher time frame swing that we could possibly take down here. But you got to wait for certain confirmations. Still have that arrow there. All right, the 4 hour. Now we can adjust this down a little bit. Price is just kind of ranging in here, but what we ended up getting was actually, yeah, we got a nice bullish trend right here that price is respecting. Higher lows, higher highs. But price ends up bouncing off 1786. Strong bearish candle, but then we end up breaking the previous support right here. Right? And then coming right back down to the support right here to create that low and hold that low. So now what we're getting is a retest of that previous support, holding resistance. Can we continue down? Right? Do we have enough range in here that we could possibly catch a sell back down to that area? We already got a strong bounce so far, but can we continue back down to that area and hold this resistance? Or are we just going to continue to consolidate? Like I said, gold likes to retest multiple times before continuing down, so I wouldn't rule out a double top over here or triple top before price starts continuing down. All right? We have a lot of things going on right now as well when it comes to our lovely Speaker of the House going over to Taiwan right now. So that's going to rattle the markets a little bit.
Stefanos, I'd just like to ask, obviously we have like NFP coming out on Friday, right?
Yes, sir. We got that as well.
And we're forecasting lower data than previous. So obviously tied in with like the recession fears and all this China-Taiwan tensions, do you not think that would support gold to push up?
Let's see, where is the economic calendar?
Because I have that, I have that 1750, 1755 level marked as a quarterly support. It's a very strong level, so just kind of like thinking whether, because we have like conflicting data as well. Like sometimes we get good data for USD. We're expecting interest rate hikes.
You're breaking up there a little bit, KB. But I get the gist of what you were saying. This is going to be a big sign for the Fed, but just keep in mind when it comes to equities, when it comes to gold or any kind of commodities right now, oil, a lot of these things have to do with the Fed increasing rates, right? Everything is being priced in when it comes to that. Because if you look at the weekly and the monthly, gold is just heading down solely due to that, right? Solely due to them increasing rates. It's not as much data as it was back here in 2021 when you had like everyone paying attention to job numbers, everyone paying attention to, like right now, people are paying attention to PCE, inflation, people are paying more attention to CPI. But back during 2021, when people were trying to get back to work and all that stuff, I feel like the main sentiment was based around job numbers and NFP. If you notice, we haven't been getting the biggest moves from NFP as of late.
Not anymore. Yeah.
So the last few months. So right now, you're seeing a lot of these central banks, the global central banks, piggybacking off of what the Fed does. That's going to be the main mover right now. So everything, this I think is just a short-term pullback before price continues down. Because again, just a reminder of what happened in 12 and 13. Exactly what happened. Look at this.
Yeah.
Almost identical price action right here. And as you guys know, history repeats itself with everything if you don't learn from it.
Definitely.
It's also because when you look at the data for the last couple of months when it comes to NFP, obviously there has been a decrease, but it hasn't been at, like an exponential rate that we were forecasting. When you look at the expected or the forecast for NFP data, we're expecting drops, and there are actual drops. But it's not as bad as, they were forecasting it for NFP, but there are a lot of data points that you can look at leading up to NFP that would already tell you that it's not going to be that bad.
Absolutely. I think we have a question from Aman. What do you think Pelosi's visit would have on the markets? Really depends on China's reaction, right? Obviously, it's a little fear in the market with her going over there, kind of defying what they're doing. I got mixed feelings about that. We'll see how China reacts. Supposedly, I was looking at Forex Factory over here. I know we're going to get into the fundamentals. Sharma will be able to cover that for you. But we have news, and where is it? Where did I just see this? I think it was right in here. Yeah. Statement out of, I'll just click on this. And this is from Forex Live, our favorite website. Statement out of Taiwan's defense ministry. Chinese drills have invaded Taiwan's territorial space. Will counter any move that violates Taiwan's territorial sovereignty. Chinese drills amount to a blockade of Taiwan's air and sea space. Chinese drills have violated UN rules. China continues to launch psychological warfare on Taiwan, and citizens should not believe in rumors. I think that's the key word right over here: psychological warfare. I don't know if this is going to get physical. I don't think it will, unless they really start to China's ego right now. They really want to take over the world. Not so much physically, but I think economically they want to be the leaders. They want the yuan to be the leading currency in the world, and they have a lot of pride. That's the Chinese Communist Party. That's how they are. So I think I don't know if they would actually invade, but I wouldn't put it past them either. With Pelosi going over there, they want to. They already said they were going to do something about it, so I could very well see them actually doing something about it. Not to add like fear point in here, but I wouldn't be surprised. Let's just put it that way. So with that being said, I think any kind of war would skyrocket gold, right? Any kind of war between the U.S. and China, the two leading economies in the world, would skyrocket gold, right? And that could be, some kind of we have recession news, geopolitical tensions, but have rate hikes to combat growing inflation. The recession, pushing rents as well as China. Yeah, absolutely. I think physical war. You guys saw what happened over here. It was the end of February that this ended up happening. So this was the spike. I remember grabbing this move right over here on gold, and price pushed all the way up to 2075 over here. And then the Fed started. Well, we really started pricing in the Fed's rate hike over here, right? So, and it looks like GJ is about to close above 162,600, so that's good.
Nice push.
What was that?
So we're getting a nice little push. Hopefully, get a close above.
Yes, sir. But pending that any of that stuff happening, take a look at this price action and just play this. Right? It looks like this candle right here is already trying to form. If you go over here and look at the weekly, right? So can we end up rejecting that area? Like I said, in the lower time frames, you may get multiple rejections of that area before continuing down, but you're gonna have those safe sells below 1750. And you can really have a lot of confidence that price will continue down, again, pending any China-U.S. tension.
All right, shall we go over the fundamentals now?
Sure. Let me just see. I don't think I finished breaking down the lower time frames here. We do have a wick to fill over here, so can price hold some kind of a resistance? And let's see the 30-minute. Yeah, so we got like a pullback here this morning, right, during pre-New York, and price is so far holding like a minus resistance right in this area, right? So can price continue down? I think we got a strong bounce over here last night. Now we're getting some kind of a higher low, but if we form a resistance here and we start getting candles closing below, let's say like right here, you could have some possible sells that you could be playing back down to 1756. So we'll see. But yeah, Sharma, you can share your screen.
Awesome. All right, everyone can see this, yeah?
Yep.
Perfect. All right, so there's two articles I'm going to go over. First, I'm going to go over with Bank of England, UK bond traders, what's pretty much going on over there. And that's because we have UK interest rates coming out this week, tomorrow. So it seems like we are, like, the market's starting to get ready and is starting to price in the aggressive increase in interest rates that we are expecting. A lot of quantitative tightening. So the last 2 years, there's a ton of money that was put into the economy, quantitative easing. Now all of that is obviously, you got to take that money out, you got to tighten the money supply, and so that's what we're expecting to see here. Pretty much the way that looks like is from the central bank side, from Bank of England side, you increase the interest rates, you start to decrease the money supply, all of that, you make it a little bit more expensive for borrowers to take out money, and then a little bit better interest rates for people who are looking for any investments and things like that. And then when you're looking at the government side, it comes down to fiscal policy. That means increase those taxes and decrease any government spending. So the government spending looks like stimulus checks, right, where there's basically printing so much money that they were making the money cheap, right, and very accessible to people. There are a lot of different ways that there's government spending where you start to put a lot of money into the economy, but those are the two things that we're pretty much expecting to see here. And then as we continue down, pretty much you have a lot of runners for the elections and things like that. So it's just different perspectives of what they're going to be doing if they are voted into the office. So right now, just remember that the UK does not currently have an active a leader at the moment. So a lot of this market fear from the political side as well, that's being priced in when it comes to the pound. And then also, we're going to continue increasing interest rates, and we are increasing interest rates at aggressive levels. So pretty much, what is that going to end up doing to the economy? Either you build a strong enough economy where it's able to support these increases, these hikes in interest rates to combat inflation, or you just end up going back into a recession because you've increased interest rates too fast for people to handle, right? And you have to take into consideration the fact that there's a lot of issues, a lot of post-COVID issues that a lot of these consumers are still facing with. You got the high cost of living that's going on in the UK, right? You don't have a leader right now. You have high inflation going on. And then UK also trying to support parts of Europe when it comes to the energies and gas and things like that, where Europe is trying to move off of Russian energy and gas, right? So there's a lot of things that are going on that are affecting inflation in general, and then now they're starting to increase interest rates. And so pretty much as a consumer, think about what that ends up doing to you as well. So that's on the UK side, Bank of England. As you continue down, you're going to see a lot more details about this with what's pretty much the sentiment, but just understand that a lot of the trading that's going on right now, it's sentiment leading up to the economic data, unless there's a huge discrepancy of what has already been put out there into, these articles and the market sentiment in general, like the data points, unless there's a huge discrepancy between that versus what's actually being put out there, so the actual versus the forecast, the market doesn't really react too much when the actual data point comes out because you've already priced that in, right? So understand that maybe today you might end up getting a lot better trades than you would right when the data comes out tomorrow, but you might end up getting some better trades right after the press conference happens, right after the Bank of England governor speaks. So you're playing off of a lot of the market sentiment, and that's where that technical analysis lineup comes in, right? Where price is bouncing off of those higher time frames, and you take a look at the weekly, the monthly, the daily time frames and see how price is playing out there and kind of follow that sentiment. Now, to come to the question of what we were talking about previously, just a couple of minutes ago, what effect does Pelosi going to Taiwan really have onto the markets? For the most part, we've already discussed, what does that essentially look like, and it's just all market sentiment. Again, the threats that were given by China to the U.S. and then U.S. to China were that, don't move forward with, U.S. telling China that don't invade into Taiwan, and then China telling U.S. to not be involved. And what they've really talked about is we're just gonna end up giving you fresher trade curbs or like more sanctions and things like that. Also threats about military actions, but again, there has nothing been done just yet. So after this Russia-Ukraine war and just trying to price that in for a couple of months or so, eventually the markets got over it because there were really no new advancements. We just knew that there was still this war that was going on. And it's the same thing here with the U.S., Taiwan, and China tensions, where there's just a lot of back and forth threats going on, and they have been happening since the Russia-Ukraine war. So it was still in the background, but the markets were still pricing that in. So it's really nothing new all of a sudden that just came out into the limelight here. So these are just threats that are being given out, and again, as these things start to advance, you could see quick little pushes in volume when it comes to safe haven currencies and commodities, but I wouldn't really expect for price to just shoot up unless there are advancements, unless there are actual military actions being taken. So here the sentiment is still that Pelosi going to Taiwan is more like the U.S. saying that we're not going to abandon our commitment to Taiwan, and then pretty much poking at China. And we, as Stefano brought up, that China was pretty much doing some military drills and things like that. So China has announced trade sanctions and also its military drills in decades in the wake of Pelosi's visit, which risks sparking a crisis between the world's biggest economies. The U.S.-China tensions, they're not anything new. They have been going on, if you think about it, recently since 2016. So for 6 years, we have been seeing these tensions between China and U.S. and trade sanctions and all that going on. Any questions about this? Alright, I try to make it brief so then you guys, don't have to sit through like a whole explanation and history lesson and things like that. But if you want, you can just go back and take a look at those articles and kind of learn about it a bit more. Now, coming on to the economic calendar, we started off quite easy this week. So we had a couple of bank holidays. We had the manufacturing PMI come out from the US here, so we did drop a little bit, and this is pretty much what I'm talking about. For a lot of the data points, you end up seeing that we were expecting a further drop, but it doesn't end up happening. But that doesn't mean that there isn't a decline that's happening, that the economy is not slowing down. We're just now starting to slow down from an overheated economy in the last 2 years, where there's just money being pumped into a lot of different sectors of the economy to incentivize businesses, to incentivize consumers, to incentivize, unemployed people to actually go out and get jobs after we went through this great resignation where a lot of people were getting a lot more money from their stimulus checks, so they just end up quitting, right? Or a lot of people are trying to switch into different industries because they have realized that if they just acquire some more skill sets, then they're able to make a lot more money. So there was a lot that was going on when it comes just to the labor market itself, but now we're starting to fill that up a little bit, that gap between employees and employers, job postings, and people actually going out and getting jobs and things like that. But we are still seeing this decline in the economy happening overall. And then we had the Australian dollar interest rates come out as well. And then Tuesday we had the job opening, so same thing here where we start to see a dip in job openings. If you look at unemployment claims, if you look at any labor market data for the last couple of months, you would see that how there's a slowdown there happening as well. We are decreasing gradually. So these are some of the data points that you can use going into NFP. And then we continued down onto today, so we had a lot of PMI data coming out, but I'm not really expecting the markets to react much until 7 a.m. PST, so in about 2 hours when the services PMI from US comes out. So same thing here where we are expecting a decrease, but it could just come down to 55 flat or like 54 or 53 or something like that. We could just end up being in a range between of the forecast and the previous. So it probably won't be a huge drop down as we're expecting. But again, whatever happens onto the consumer side, you're probably going to see that reflecting into the services side first and then onto the manufacturing side. So we're already starting to see the manufacturing side slow down as the data came out on Monday. So maybe we're going to see a huge or a further drop here in the services PMI because consumer confidence was already dropping last week. When you look at a lot of the consumer data in general, you don't see a lot happening, a lot of spending or a lot of confidence or anything like that when it comes to economic outlook from the consumer perspective. Make sense?
Yes.
Perfect. Now going on to tomorrow, we have the interest rates coming out from the UK. And so we're expecting another hike, half basis point hike. So unless there's a huge change here where they come out even more aggressive or maybe they maintain the interest rates, I'm not really expecting the markets to react too crazy here until Governor Bailey starts speaking. So for the most part, there has been this sentiment for the last couple of months that the Fed and Bank of England are going to continue increasing interest rates by half basis point hike, by like a 75 basis point hike, things like that. But also you have to pay attention to what's the state of the economy. And right now, for both of them, the economy is not there to support a massive hike in interest rates. And then going into, so after that, you just have, a couple of medium impact data, but unemployment claim comes out every week, so there's not much reaction to that anyways. And then going into Friday, you have NFP. So you have two very important data points coming out right after each other, so understand that there would be some slowdown that will end up happening in the rest of New York session on Thursday, or even Asian session on Thursday, and maybe some movements happening in London or late Asian. And then NFP, a lot of times we don't get massive movement, so you could end up catching a couple of pips when there's spikes here and there. But same thing here, unless there's a massive drop down that happens, I'm not really expecting the market to react much to NFP. Alright, it's all yours, Stefanos.
Hey, Sharma, just go over the news real quick.
What's up?
If you could just go over the news real quick.
Oh, right here?
Yeah. I know, up top, next to calendar.
Yeah.
And then hit more, over here on the side.
Here?
Right here.
Oh, okay.
Where did I see this? Keep going down. It was something I think, not Bullard, but someone from the Fed was talking about recession. Yeah, am I crazy? Yeah. I hear. I'll just share my screen. I'll see if I can find the break.
Go for it.
So we're getting that rejection over here on gold. Bearish candle right now, so we can get some bearish volume. Where did I just see that? They deleted it because they thought it was stupid.
Steph, I just sent a link. You can open that.
Yes, there you go. You know exactly what I was talking about. U.S. is not in a recession right now. Is that all that pops up? Yeah, so they remain in denial that we're statistically in a recession right now. I don't know what makes them think. Maybe jobs numbers, but those job numbers are really just kind of skewed from people, as Sharma was just breaking down, people leaving work and coming back and, trying new industries and stuff like that. But, just these companies bringing back the same employees really from where they were. So, again, that doesn't mean really anything about a recession. I think we're in an inflation type of recession right now, and it's just not good. But
There's that, but it's also when you're looking at legit, just pull up CNBC, pull up Bloomberg, whatever you want to pull up, whatever you look at for articles and stuff. There are massive companies that are doing layoffs, right? That are stopping their entire hiring process, their recruiting process, and things like that because they cannot afford more employees. And when this entire shift happened where people were quitting and, they weren't really filling up the job vacancies and stuff that we've had after the economy's opened up, the employees, the people who are going out and trying to get jobs, the unemployed people had a lot more power than they do right now because you could go and negotiate your pay. You could go and get like a higher pay than you did at your previous job or that you did previously when the pandemic happened. Now they don't really have that power because, when the economy's opened up and they were, they had this power, employers were actually agreed to pay them higher wages just so then they can the companies or the business or whatever they're running, the goods and services, whatever it may be, so they can keep up with the demand, right? But now they don't have that power anymore because these businesses just cannot afford paying them even more. When you're looking at the micro level, there are already signs of slowdowns happening, of unemployment increasing, right? A lot of huge tech companies in general just slowing down their entire hiring process. Meta in general is firing people. There's huge layoffs happening from Tesla. When you're looking at the airline industry, there's a lot happening there when it comes to labor shortages as well, where flights are getting delayed because there's just not enough crew there, right? Where there's not pilots, there's not just enough, flight crews or whatever. So when you're looking at the micro level of the economy, there are already these signs, regardless of whatever the Fed is telling you, or whatever sentiment is being put out by the White House. You could keep saying we're not in a recession, but when you're looking at the data points, it's telling you everything about we are moving into a recession if we're not in there like halfway through already.
absolutely, all great points. It's it adds distrust to the public, right? Especially when people know what they're talking about, know what they're doing, it just adds more and more distrust. And when you lose distrust, or when you lose trust, society is not in a good spot.
Exactly.
So gold.
Okay. Sorry, go ahead, Steph.
No, go ahead, Gibby.
I was just going to say, we have PMI coming out. Obviously, that is another important data point that sort of indicates whether we're heading towards a recession or not. So if that was to come out lower than forecasted, obviously we'd expect gold to continue pushing bullish, right?
For PMI?
Yeah.
Yeah, so if we get, obviously, good PMI, gold could continue back down. But if we get bad PMI, it'll go back up. I don't think they're expecting, let's look at the previous PMIs. Because as you see from November 2021,
Yeah.
you've just been going down, right?
Yeah.
And we're a services-based country. Well, hold on 1 second.
The dog.
Alright, did anybody take that GJ trade?
Yeah, I was just gonna ask that.
Perfect.
No, I didn't get my closure above just yet.
Alright, I just took it and I took some partials, so I'm gonna go ahead and send my chart here.
Awesome. Where'd you take the Sharma? As soon as this candle closed above?
Yeah, the 30-minute candle closed, or like it broke the previous 30-minute high and then it continued pushing from there. That's where I took the entry.
Nice. I'm looking for some kind of a pullback here because I believe, we could get the pullback from rejecting that 163 area. If you thicken that up a little bit, you see the little bounce off that area so far. I think we're going to continue up. We got that solid close above. I'm just waiting for my setup, like a nice little support formed right here, and then I'm going to take that up. All right. Anybody else in that? Nobody? Oh, Lewis. Nice, man. Lewis, where's your stop loss? It was 62, 442. Okay, so below these wicks. Nice. Okay.
Alright, here's my chart.
Makes sense. My thing is, I figured we would get that pullback out of this area over here, and like obviously retest this resistance. And in that case, I'm just looking for a tighter stop loss. So if we get like a nice close on the 30-minute, either this high being created, and then we get some kind of a support formed with candles closing in my direction, I now have a tighter stop loss that I could take this thing up with. I'm gonna send a chart. Beautiful. This new support forms. Just broke the previous 30-minute high. So you took it over here or over here?
On this massive bullish candle that continued pushing.
Okay.
Yeah, right there.
Okay, nice. Stop loss below previous 30 minutes. So this one? Below this one?
Yeah.
Okay. Cool.
And then I reduced it now after taking partials. I reduced that stop loss down here. So the thought process is that we could come back and kind of tap into this area, given that there's a lot of liquidity here, a lot of volume here, and then hold on to a support and then continue pushing back up. But as soon as price breaks below the zone, then I'm pretty much out of the trade after securing all these partials up top.
Nice. What, did you take like 80%, 50?
75%.
Nice. Perfect. I'm taking trades on here with you guys. Alright. See, we're getting a little pullback here. Doesn't mean we're not going to continue up, but looks like it wants to at least tap into this resistance over here one more time before continuing up. But good news is we're high now. Alright, so we'll see how this 30-minute closes. Whether it closes bullish or bearish, I think we're going to hold some kind of a support here, possibly to continue up. If we do, I'll be taking this up depending on the setup. Again, you have 38 pips in here that you could be grabbing. All right. Anyone want to break down the chart?
We can also do US 30. We didn't do US 30, right?
Yeah, no, we didn't. You want to break that down?
Yeah, we can do it.
All right.
Alright. Give me 1 second here.
Praveen back. I'm there.
Here we are.
Let's see. Okay.
Alright, perfect. Alright, we're going to start off with the monthly time frame here and then drop down to lower time frames from there. So first thing is going to be the support here based off the monthly time frame, which is that 30,700 area. And then, oh, let me bring that back.
Can you guys hear that?
There you go. Yeah, a little bit. And then I'm going to mark off this current resistance that price is forming right here, which is going to be at 32,800 level. That's where price pushed up last month, closed out right at that level, and then the current monthly candle, even though it's just 3 days in, made a top wick and is starting to come back down and kind of push back down. But that's the area that was pretty much the support for all this consolidation before we saw a massive drop down happening back in June. Drop down to the weekly time frame, so we start to see, if you want to create a zone here you could, but we start to see how pretty much price ends up reacting right into this area, right, where it taps into it and then there's a lot of volume that tends to follow. So we came pretty close to it, and then there's a lot of volume that follows. We ended up creating a new high compared to the previous right here. Same thing where price pushed back and then we came back and created a new high, maintaining that downtrend for the most part, and then came back right into this area, tapped into it again, made a top wick here, and then another sell-off coming back down where we ended up creating a new lower low. So we pushed back up after that, and it seems like we're creating a resistance here, but again, you kind of want to wait until the week is over to kind of make that determination. So can we end up seeing something similar here where you had a bearish candle close and then next week we end up making a top wick and then continuing pushing back down? Possibly, as we're getting a lot of the data points, it could end up happening here. So this is why you want to pay attention to the higher time frame levels, where you want to take the extra effort to go up to the monthly and weekly time frames, just so you pretty much understand how price is reacting off of these higher time frame levels, these strong levels. As you start tapping into these levels, also understand that fundamentals are going to be very important. So economic data is going to be very important. So here we started this downtrend here from all this consolidation. We're still maintaining the downtrend where you have all these lower highs being formed right at these levels, and then even based off the daily where you had a resistance being formed, and then yesterday we closed off bearish with a lot of bearish volume, and so now we just ended up making a bottom wick, and it seems like we're pushing back up bullish with some volume. So what we want to end up seeing here is price, for example, pushing back up, giving us some nice and break in retest, and then continuing back down from there, so we can look for sell opportunities, ultimately coming back down into this 30,800, 30,700 area. Yeah, something like that, where price give you a nice push down. I don't think we're going to end up seeing a lot of consolidation right into this zone, given that we've already broken below it. But I do want to see some sort of break and retest here.
Yeah, I was just gonna say, just wait for confirmations, extra confirmations. Just looking at this candle specifically, say this never happened, people could have probably thought we were creating that lower high. The next candle actually did end up passing the low of it right here, right? So it looked like we were gonna continue down through this area right here and mirror the move and create a new low, especially with the sentiment coming out that we were going to continue down, as you guys can see right here. US 30 better than I do, but I could very well see people getting trapped right there, and then it consolidates and then it further drops. So it's just a little warning.
Yep. And then what we can do is kind of narrow in that area here too. So if price breaks below this, then you can look for sales coming back down into this consolidation and then further down from here. This is on the daily time frame, so don't be surprised if price does react heavy off of any of these levels.
Yeah.
Alright, let's go ahead and drop down to the 4-hour now. So on the 4-hour time frame, we do have some consolidation pretty much going on here, where you had a nice push up, a nice bullish push up after a liquidity grab on this candle, and then came right above this 32,400, consolidated a little bit. We pushed up right into that zone of liquidity based off the monthly, weekly, and daily time frames, and now again consolidated, push back down. We're just holding on to a support here. So if there's going to be any buy opportunities, if you really want to narrow in your zone, it's going to be above this area, but again, it's going to be like a quick scalp or even a day trade, but that's about it. So that's your 32,600 area. price pushes above that, you have a buy opportunity coming up to 32,800, but that's pretty much it. You're going to be playing in this range. If you want to look for those safe buys or sells, then wait for price to break below this 32,400 for any sell opportunities coming back down, or buys above this 32,800 and then it continues pushing, maybe even 33,000, right? But other than that, if you're not comfortable trading in consolidation, if you're not comfortable with the whole concept of knowing your limitations and all of that, risk management, you still gonna struggle with that, I would kind of just stay out of this range. But other than that, I think you have some good trade opportunities that can be taken advantage of here. Now coming onto the hourly, same thing, a lot of messy price action, but at least it's giving you those corrective moves of that massive sell-off that happened. So anytime there's consolidation happening on the 4 hour, 1 hour, I personally don't even drop down to lower time frames because we know that's just going to look even messier, right? And then you're going to end up getting more confused. But if you're looking for those trade opportunities, then these are going to be the quick pushes of volume that you can take advantage of. I would suggest if you're going to do that, then trade during the times when there those little pockets of volume. So for example, right when the New York Stock Exchange opens up, really about 15 to 30 minutes after that, there tends to be a good push, right? Or an hour after that, there's another good push that happens. And then as you get closer to around 8 a.m. PST, which is 11 a.m. Eastern time, there's another good push that happens around that time. But you're pretty much done after that point when it comes to New York session and scalping US 30.
Absolutely. Yeah, I was looking at this over here, and like the pretty similar price action, leading its way up like this.
Mm-hmm.
Not that, but right here, it gradually was pushing its way up, and then you got this drop right here. Could that end up happening? We reject 32,600 and then continue right back down from there.
Yep. Perfect.
Looking for little clues.
Should I pass it over to you now?
Yep. Wait, not to mention also, you got a trend right here in a key area.
Yeah.
The price could be rejecting off of right here, and then you can play these down. You just may want to stay out of the consolidation or wait for price to break this support right here, and then you continue down.
Yeah, and you can also look at the previous simulation session that we just did just a couple of days ago for US 30 on YouTube. And there's going to be a lot of similar setups here.
Yeah, absolutely. So we just got the 8:30 candle.
All right. It's all yours, Stefanos. Go for it.
Sure. All right. So the candle ended up closing a bullish candle right over here. Sorry. But the 15-minute candle closed bearish. So now you could wait for that support to form right here and see if price is going to continue up. Look for that bottom wick over here and price continues up from there. But the 30-minute did close bullish here, but it did reject that level. So can we respect the low of the previous and continue up to fill that wick and continue up from here? I could see it happening. I just want to see price hold that support and respect the low. If it doesn't respect the low and continues down, but then ends up holding a support later on, you may just have to wait a little bit longer to take the trade. But this way, I'm giving you guys an opportunity to possibly have a tighter stop loss instead of having to put it all the way down here when you know you have 163 that price could reject right over here. So you got a nice, like if we break through 163, you got a nice move, about 115 pips to continue right back up. Let's look at the chat. Nice job, KB. Guys, send your charts so we could correct them or let you know, like, these are the levels that we're seeing as well. Specifically, like, do them before we get to the session and get to the breakdowns, because now, you know, we know exactly what you're thinking. Buys with minimum 15 to 30-minute candle close. This is gold. And support above. Great job. Sells with minimum 15 to 30-minute close. Support flows. KB, with the 5-minute and the 15-minute with the news, how have you been doing with that? I know you took a nice trade. What was last Wednesday? Or no, we traded Thursday and Friday. So what was the news that you caught?
It was, I waited for so anytime any news comes out, obviously I wait for a 5-minute close. Sometimes, very rarely, I look at the 1 minute. I've only ever, I think I've done that once, but I've back tested it a couple of times. And it's pretty much like the 5 minute. You just sort of wait for a clear direction, some sort of volume, candle closure, and then, you know, the top wick, bottom wick, and then break of the highs and the lows. And
I think it was PCE, right?
yeah, it was PC, exactly. Yeah.
Grabbed a nice move. What date was this? The 29th. So looking at gold, getting a further pullback over here on GJ. Looking for the support to form. The 29th, right here. So you grab this. I know. Where are we?
A little bit. There
Yeah.
you go.
There's like one of these moves right here. Was it PC or was it the day before? Hold on 1 second. We'll go over it
I
in a
believe
second.
it was PC.
Okay. Do you have it journaled?
I do somewhere.
I'm gonna use the bathroom real quick and then I'll be right back.
No worries.
Hey, wait, Sharma, I'll give you a remote control. Oh. There you go.
Perfect.
Let's make it a nice push up. So let's see if we get that close above 1770. Be right back.
And then I'm also in gold, but same thing, just took a partial there. I'm sending the chart here as well. Let's see. Yeah, so you guys can pull up the chart on your end. For YouTube, I'm gonna have to bring it up here on the screen, but just like a quick follow along for you guys here too, is pretty much took this gold entry as price was breaking the highs here. So if you drop down to the 15, you had a liquidity grab, so it's the same liquidity grab candle based off the 15 and the 30-minute time frame here on gold. And then you go into the hourly, same thing, where price held onto a support, grabbed that liquidity, respected the support, and then continued pushing bullish from there. So that entry that was taken was that break and retest on the 30-minute time frame, but also price was breaking above this hourly top wick. And then you go into the 4 hours, so same thing here, that nice liquidity grab and also a break and retest as price is pushing up. So we were getting some nice confirmations across time frames. Put the stop loss right underneath the support here, because the 30-minute candle closed, so there should really there should be no reason for price to come back and break below this if it is to continue pushing back up bullish. The reason why I took a partial here in this blue zone is because of that resistance that was formed here to the left, and then also all that consolidation. So that's where I close out 50%. What I do want to see here, in order for me to look for another entry or anything like that, which I probably won't be doing unless I close out my GJ trade, is a break and retest here and then a continued push up. The reason why the take profit is at that level is because that's the 4 hour resistance, the previous high that was formed. So that's pretty much the confirmations here for this trade. And then same thing, reduce the risk here. So now the stop loss is at right around this area, that resistance right here. So I reduced it. It's not at break even, it's not completely risk free or anything, but I'm giving price pretty much enough room to kind of fluctuate as it continues pushing up. Any questions? Make sense?
Yeah, it made sense. That was beautiful.
Perfect. I could kind of show you guys here too if you guys see the cursor, but again, the entry was as price was breaking above this, the liquidity grab right here, and then price pushed back up. That same liquidity grab was shared across time frames. So if you go into the 4 hour, for example, that liquidity grab wick right here, and then candle pushing up, that current 4 hour again ends up breaking the previous 4 hour highs. So it gives me further confirmations that we could look for potential buys even further up, but we would need to see some candle closes here in the next 22 minutes. You come onto the hourly time frame, price ends up creating a support, again liquidity grab, and then we end up breaking the high of the previous hourly candle, drop down to the 30-minute time frame, and that's pretty much where the entry is. And then took some partials here at around 20 pips, 50%, and then I want to see a break and retest here for price to continue pushing. If you guys have any questions, let us know, and we can try answering them to the best of our ability.
VJ, did you say you amended your stops?
Yes. Now stop loss is sitting at this area right here. So I reduced it. It's not at break even. It's not completely risk free yet, but I've reduced it to the point where it's almost, close to break even. But I want to give price enough room to retest and then continue pushing up.
Yeah, makes sense.
The stop loss that you have on the screenshot is the original one.
Yes.
Now, how did you place that?
How did I what?
Place it at the...
I placed it right at
the-
this area here where the thought process is you've already grabbed the liquidity from here. Price is pushing up. You're breaking the highs. There really should be no reason for price to come back and kind of tap into this area here again. Especially close to a 30-minute close. And then I reduced it up top here where the thought process here again is you could come back and hold on to a support before continuing pushing back up, but you really shouldn't be coming back into that consolidation if if gold is already ready to continue pushing. If it comes back into this area, it probably will end up consolidating, or we may just end up just ranging into this area here, which I don't want to be a part of.
Yeah, I like that liquidity grab right here. Because you got the higher low formed over here. Not higher low, but support respected, 1756. Higher low right here, right? And then we push up, kind of consolidate, grab liquidity, and then this candle flips bullish, closes a very strong bullish candle. So I'm looking for that close above this area.
Perfecto.
You took this trade right here?
Yes.
Nice.
So I'm in this and GJ.
Yeah, you killed it this morning. I like this bottom wick rejection so far. It did pass the low of the previous candle. So that was it. Let's see the 15-minute. So we'll see how this 15-minute candle closes, and if the next one creates a bottom wick past the high, we should be able to continue up from here. So let's see what we get. Yeah, I like that clean move to the left. Alright. Anybody else in any of the trades that want to go through? Nobody? You guys are tired this morning, huh?
I'm just waiting for gold, just like you, bro.
Yep. Yeah, just waiting for that close above here. No need to rush anything. Got ISM services.
Mm-hmm. New 4 hour as well.
Yes, sir. Services. Yeah, new 4 hour coming up into play. Let's see. See, this is nice. Again, you could definitely squeeze another buy out of here before we continue back down. You got a clean move. We could get that double tap of 1785. Obviously, some tensions in China right now, so that could be playing into it. So we'll see how this candle closes. 1 hour looks great.
As soon as this 15 closes as well, and if it closes above this resistance, I'm going to move to break even.
Get both pairs on here. So we're getting that retest. I kind of moved this thing over a little bit, just so that it wasn't in our way. But this is what we're getting right now. So just look for this support to hold and see if you can continue this thing up.
So here, what I would want to see is, let me do that. There you go, so I could annotate. So what I would want to see is this candle closing just like this in the next 2 minutes or so. I don't think we're gonna have enough volume to come up and, you know, engulf all of this, but just close bullish here, and then the following candle ends up making a bottom wick, you know, maybe come back and kind of test into these lows that it's forming, and then from there flip back up bullish and then break the highs. And then as it breaks the highs, that's where you could potentially look for a trade opportunity and then kind of keep your stop loss right below this candle here versus putting it all the way down here. And then a continuation up from there, 10, 15 pips, whatever it may be, end up taking some partials here and let everything else just run.
It does get a little sticky with the tight stop loss right there below the 15. I feel like if this was the 30-minute setting up like this,
Yeah.
I'd 100% be down to do that. But I feel like the 15 might be a little too tight now.
Possibly, but in 15 minutes you also have the New York Stock Exchange open, and that's usually when we get a lot of volume.
There you go. Oh, looks good. That's the 15 on gold. Got a clean move. I'd say could catch a nice trade right up into this area. So you got a nice clean move up to that point.
Yeah, so I'm targeting 18 or 1780.7.
80.7.
Yeah,
Okay,
so
so
that's
this,
the 4-hour
there.
resistance.
Yeah, that wick.
Yep.
Oh no, right here. Let's see what we get. All right. Any questions from anybody? You guys are good.
Steph, would you be comfortable taking a gold buy, say, at what would be in 15, 16 minutes?
Yeah, once
Or above.
yeah, I mean, it really depends on that's one thing I was telling the group yesterday. Like, over the years, what I've learned is, like, in the beginning, I used to say, like, you know, I'm not trading in the zone, or I'm not taking this or that.
Yeah.
But it really depends on what kind of setup we get at that time, because, like, it could look unattractive at the time, and then all of a sudden, like, you get the perfect setting up with a clean move to the left and a nice range, and you can end up taking it, right?
Mhm.
But so I want to see at least like a bottom wick rejection, as you mentioned. Like, we got the 4-hour closing soon.
Yeah.
So looking at the 4-hour here, maybe I'll wait for the new 4-hour, right? See if the 1-hour ends up closing above this level, not just the 15-minute, and then you could take a bottom wick rejection, which would be the 4-hour bottom wick past the high, and let's say this candle closes right there, right? We would end up getting an identical bottom wick right around here, which is what I'd want. As soon as that candle flips bullish, I'm in. Stop loss right here. Or right below, like,
That's what I'm looking for, to be honest.
what was that?
That's exactly what I'd be looking for as well.
This 15-minute on TJ ended up closing a little weak. And the 30 minutes indecision,
Mhm.
right? And this candle ends up rejecting that area. That's that area I was talking about right here. Is that 163 area. All in this area over here. You go from these wicks up to 163. Price just ended up rejecting that area. I still think we can continue up, right? Based on the higher lows being formed, and just staying fluid with the market. But at the same time, like, you just got to stay more patient. And that's all this game is. If you don't like what you see, or you see somebody taking something that you don't like, don't just hop into it because they're taking it. Just wait to see what you want to see. Stay patient. If you miss it, you miss it. Right? There's going to be plenty of opportunities. It's only Wednesday.
Absolutely.
Right? This game is all psychological. I mean, breaking down charts and stuff like that, that comes with experience, and you just get good at that as time goes on. but psychological stuff, you're always going to be master.
Mm-hmm.
Right? I mean, you could always master breaking down charts, but you get to a certain point where it's almost automatic for you. It's unconscious competence, which is where you want to be, breaking down charts. But like I said, when it comes to psychological stuff and sticking to your risk and all that stuff, that's all that's all stuff that you master as time goes on, and you really never stop. So we got a bottom wick rejection here on the 15-minute. Just don't want to get trapped on that.
Yeah, I hate the last 15 minute of a 4-hour candle.
Exactly.
So we got 2 questions here in YouTube. How do you understand if the dollar is weak? And if it is weak, then how do you know whether the market's going to go up or down? So
you can
go ahead.
Go ahead.
No, go ahead.
I was just going to say, you can use the indices over here. Like, this is the US dollar currency index, right? So if you type in DXY on TradingView, it gives you a good idea of where where the dollar is for the day, and that can help you with gold as well, right? So the current daily candle right here is rejecting this previous support. It's pretty bearish. See the 4-hour candle, right? We got this resistance up here. You got this support over here as well, so we can definitely mark this off. Kind of sitting in that range right now. The price is just like bouncing back and forth on the 4-hour.
But also just know that you can use this as supplement information. So this could be like just an addition, but the dollar could be strong. Right now, for example, if it's pushing up bullish, the overall trend from like October 2nd, since yesterday, it's pushing up bullish, right? But just because here the Dixie's telling you that it's strong doesn't mean that it's going to be strong against every single currency. So it could be strong against, if you're trading GBP USD or against the euro, but it could be weak compared to maybe another stronger currency than this.
Absolutely. Right now, we've been making, ever since Powell made those statements last month, we've been making lower lows and lower highs over here. So right now, we could be making another lower high to possibly continue back down to like 105 area.
Yeah, but also personally, I don't drop down to anything lower than the daily time frame when I'm looking at any index, because I'm more intrigued by the higher time frames and where is the currency headed instead of just intraday levels. And then we have a second question. So based off the 1-hour or 4-hour, how do you identify key levels for buying or selling?
I like to match up key supply and demand areas. Where did this come from? Just analysis from last night. I like to identify key supply and demand areas. Here we go. Where price is matching up, like right here, where price ends up bouncing off that 160 area down here. Obviously, just keep that there. We're bouncing off 1680. Create like a double bottom over here. Price just pushes up. We create a new high, and we come right back down to this area of the previous support, right? And that's the first area where we end up, tapping that. Second area where we end up tapping that area. But to make it a valid trend line, we end up pushing from here, 161,200, up to 162,650, and then we pull back, hold support. This ends up being a key area right here, where the support and the trend line ends up meeting up right here, right? Making this a valid trend line, tapping the third time. And then all of a sudden you get this hard volume push and now a higher low pushing from that area. Right, so that's how I like to identify key areas that I like to trade from.
I would also look at how many times in the past has price reacted to that level. If it's multiple times, and then being able to also identify volume. So volume is pretty much, wait for a candle close in that area, and then what happens in the following candle. Does it just push up? Is it like a 50, 60, maybe 100 pip candle? And, all that, looking at that, and is there a lot of volume in the following couple of candles? So I would look at, first of all, do candles actually end up closing in this area, reacting to this area, creating wicks into this area multiple times in the past? And then I would go as far back as you possibly can. I don't usually just stick to 1 year or 2 year or anything like that. I just want to see how many times over the course of this chart's history has price reacted here. And then if it hasn't reacted there much, I really don't care about that level. But if it bounces off that area, a lot of times, if there's consolidation, wake rejections, candle closes, weak candle closes, anything like that, dojis, then I want to see how price, the chances are that price is probably going to end up reacting there again. So then I want to mark off that level. And then if that zone is shared by the daily, the 4 hour, 1 hour, 30 minute, 15 minute, weekly, monthly, any time frame, higher time frames and down, then the chances are that's a very strong level. So that's pretty much how I would identify those key areas. And pay attention to structure. So just because there was a massive sell-off, let's say a month ago from that level, doesn't mean that there's going to be a massive sell-off from there again if the structure is bullish. So pay really close attention to structure as well.
100%. So could we get something like this over here on GJ? Again with the weak Japanese yen on the day in the last few days. Since the beginning of August, we've been bouncing off 160, high demand area.
So we're going to stick around for about 6 to 7 minutes more. If you guys have any questions, let us know and we'd be more than happy to go over it.
Did that clear everything up for them?
I think so. Did that answer your guys' questions? Yeah.
Gold's making that last push over here before the 4 hour close.
Yeah, so I have moved to break even for gold. I've actually trailed my stop loss. So my entry was at 1767.66. I've trailed it up to around 1768.5. And then for GJ, I've also moved that to break even. So it's right into that zone anyways, the entry point. So if price is just going to hang around this area, it could possibly at this point just end up creating a support and then continuing pushing back up. But if it's going to wick around and stuff, I don't really want to be a part of that anyways. So both of the trades essentially are risk-free now.
Awesome. Great job this morning.
Thank you.
So we have, what was it, 33 signups, new signups for the bootcamp, or is it signups with our members as well as outside people?
Members plus outside people.
Okay. So, and then people just have to submit their payment and then they'll start getting more information?
Yeah, so all they need to do is submit the payment, and the sign-off, or the sign-up form is going to be closed on the 13th, so you have 10 days to sign up for the bootcamp, and then the bootcamp's going to be the following weekend. So we're going to go over, the basics of Forex, all of that. What do you need to know pretty much to get started? What is Forex? Going over, trades and everything like that. The different types of trade, basic terminology, all that stuff, right? All the very basics that you need to know. And then we're going to move on to technical analysis. So a quick intro over, what are the different types of technical analysis, price action, and everything like that. And then we're also going to go over some strategies that you guys could pretty much implement getting right out of the boot camp. So if you're having troubles with just sticking with one strategy or anything like that, it's going to be helpful. Then we're going to move on to fundamental analysis. So we're going to show you guys exactly what are the different fundamentals that affect a pair, a currency, a commodity, anything like that. And then how do you actually go out and find those fundamentals, and how do you align that with the charts? We're going to end, and then we're going to obviously go over risk management, trading psychology. Stefanos is going to give you guys some more information about, just discipline and kind of building a better lifestyle that kind of supports your trading habits, but also to help you be successful outside of trading. And then we're going to end it off with a simulation session where we implement everything that we've talked about in the boot camp with fundamental analysis, technical analysis, risk management. You'll be able to take trades with us. You're going to see other students taking trades with us too. And then you'll see us, how we manage our trades. And then at the end of it, I personally, the last 2 boot camps that I've done, I like to throw in something extra. So you guys will probably get some more resources at the end of the boot camp in the emails that you provide in the form with some just extra material that's going to be helpful.
You guys just keep in mind, every boot camp that I've gone through, whether it's in person or online, I've always taken a major step forward. Not only just the information that I learned, but like just implementing that after, and just really like there might be one or two nuggets that you pick up from that could completely set you over the hump that you're probably in right now. So um, it's an investment into yourself. It's really not that much for the amount of information that you're learning. I don't want to sound like I'm selling right now, but I just promise you, you're going to get a lot out of this, and this is exactly what you may need. And you can ask whatever questions you'd like, and it's going to be good. It's going to be fun. Nice little Saturday together.
Yep. So if you guys like want the link or anything, it's on my Instagram, but also like on YouTube. If you just go onto the channel, I believe it's under community. I made a post about it, so you guys could just fill out the form there, and then as soon as like you have about 10 days before the entire sign up process closes, and that's the last day to make any payments as well. And then we'll just send you more information, Zoom link, and everything, everything that you need.
Yep. Absolutely. Alright, so we're just waiting on this to close right here. We'll see what the bottom wick forms. Looks like you did pulling back over here, getting that proper retest.
Got about 2 minutes, so I kind of want to go over, what to expect for the rest of the session, if that's cool.
Yeah, of course.
Alright. So for GJ here, just based off the 30-minute time frame, so we're seeing some nice supports obviously being formed here. What I do want to see here is this 30-minute low that's already being broken. So what I do want to see in the next minute or so is this strong bearish candle close, if you're to look for any sells. A strong bearish candle close, and then you can look for sells. The chances are we're probably going to come back into this area, try to create like a new low, and then continue pushing back up from there. But at this point, I'm pretty much out of this trade where I was at the break-even point, just above break-even. So I'm out of this trade. Now what I want to see for any buys is, again, higher lows being formed and then a continuation back up from there.
Sure.
And then when we're looking at gold, on the other hand, we're seeing a nice bullish push up. So look at those higher time frames for gold. Look at the 1 hour, look at the 4 hour and everything. We got those nice confirmations from there. We got nice liquidity grab. Just to come back to the question that was asked earlier about, the key levels and things like that, and I was talking about liquidity and volume. This is an example of it, where price created support. That was your liquidity grab right here, and then you got a massive volume to the upside. If you can drop down to the 30-minute real quick, Stefanos here. Same thing here, where that was your liquidity grab, and then you got massive volume that follows, right? Look at the following candle. Did I even try going bearish at all? There's no bottom wick. Price is just pushing up, and even right now with the current 30-minute candle, we're trying to break the previous highs here. So that's what volume essentially looks like. So when you're on those hourly, 4-hour time frames, looking for those key areas of support or resistance, you want to look for something like this. Do we have a liquidity grab and then a continuation push from there? But here, what I do want to see is the 4 hour, 1 hour, all of that closed, insanely bullish. So I do want to see a break and retest into these areas and then a continuation back up. It could be a deeper pullback. I'm okay with something like this and then a continuation back up, but there should be no reason for price to come back and tap into this area here.
Yeah, all great points. Again, as you can see, we just passed the high right away. So to Sharma's credit, passing the high right away, you see all that volume, but we need that pullback. So that's what I'm looking for, that 17,700 level to be like held as support, or at least like tapped into. Nice little pullback, and then price continues up from there. But we're still in the first minute of the candle, so just be aware of just trying to like jump into this and not knowing, or jump into this and try to grab the volume, then all of a sudden you get trapped. Where's your stop loss going to be? Is it going to be below this candle? I probably wouldn't put it there before the stock exchange open. Right? I would wait for a nice support to be formed or a bottom wick rejection, and then taking price up.
Absolutely. So we got a few more questions, and then we'll call it a session here. The first one is from Eddie. Are we going to trade NFP live? I personally want to trade interest rates. So, maybe Stefanos and I will see like how our schedules work out tomorrow. And I want to trade the UK interest rates that come out. I think there's going to be a lot more volume there than NFP. and then we'll let you guys know. I'll either post it here on YouTube or on my Instagram. And then the second question is for beginner, which currency to focus for trading. And they have a watch list for major currencies and exotic currencies, and it creates a lot of confusion for them. I would stick to first the major currencies. They do move a little bit slower, but you do have a lot more potential when it comes just to like learning, and it's a little bit better when it comes to learning. So I would go with Euro USD, GBP USD, AUD USD, any of the major pairs. And then from there I would move on to the minor pairs, and then from there I would move on to gold, and then I would look into US 30 or exotic currency. I would not look at exotic currency anytime before you look at minor currencies or minor pairs or gold. Mm-hmm. So that's the order that I would go into.
And then GJ, I kind of like this setup right here with the way this bearish candle closed with the top wick right there. If we could hold support in this area right here on the 30-minute or the 15-minute, see what the 15 looks like. Yeah, if we can hold support, I'd rather see it close bullish on the 30-minute. I think we can fill that wick and continue up from here. That's what we've been waiting for all morning, and that just shows how much patience really plays when it comes to this, because now you'll have a nice tighter stop loss to continue this thing up.
Absolutely. And the last question, and then we'll call it a session. Is there any lifetime membership? I personally don't have lifetime membership anymore. I did, but that changed this year. But now I do have yearly, quarterly, and monthly. And you can just go on to www.SharmaFX.com, kind of see what all of them entails.
Sure, I want to ask you about that. We'll talk off there.
Yeah, for sure. All right, so that's the session. We just went over the entire breakdown, technical, fundamental. Took some trades with you guys here too, and also went over the next steps. If you guys have any questions, just feel free to reach out to either of us. You can reach out to me on Instagram at SharmaFX. That's the fastest way to get a response from me. But other than that, we will see you guys soon. So I will post about it, whether or not we're probably going to end up doing interest rates tomorrow, but I'll keep you guys updated.
Guys, continue getting the most out of yourselves this week and really digging deep into your trading. Make sure that you're back testing and going back and studying your previous trades, writing down what you're seeing, journaling your all your thoughts during these sessions. It goes a long way. I know it seems tedious, but that's how you get better. Right? There's no really other way, unless you want to take a long time to get better. Then that you could go that route. But if you want to cut that learning curve and really get better in a shorter amount of time, journaling and writing down and improving on a daily